The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we're wrapping up the month of November, we saw some decent strength in corn and wheat on Thursday's trade. The soy complex was a little under pressure as we watched the latest OPEC meeting, putting some pressure on crude oil, which kind of spilled into the soy complex, it felt like, and another volatile day in cattle to the downside. We're going to talk about all that and more here on today's program. Joining us now for market analysis, Brian Doherty, Senior Market Advisor at Total Farm Marketing. And Brian, good to catch up with you. Hope you had a happy Thanksgiving and watching this market trade here this week. It's been quite interesting, but a little bit of green and quarter wheat on the day Thursday, Brian.
Interesting. Yeah, we did. We had some things happen here in the last 24 hours that I guess you can look at from different angles. But so a lot of times when I look at the market, you look at kind of this big picture and then sort of a medium picture and then under the microscope. So last 24 hours, I would say, is under the microscope. What does that mean? Well, we had export sales released, and those were really solid for corn and beans. So good numbers there. Had announced export sale number or announced sale on soybeans today to China, over 100,000 metric tons. So we're seeing some things there. Good technical trade. Yesterday, corn did break down, traded under 450 in December, down around 447. Closed today 461.75. So pretty good jump today. No deliveries overnight. So again, looking at that kind of that microscope, it looked like a lot of farmers might have had to make a decision at the end of the month on basis contracts, whether to roll to March or some other delivery period, or just get rid of it. And I'd say a fair number of guys probably just said that's enough. I don't want to roll to a big carry. Got storage, costs, these things mounting up. So I think that pressured the market into yesterday, and then today, pretty good turnaround there.
Yeah, pretty good turnaround there. To your point, I've heard a lot of chatter. Some farmers have said, well, I put the grain in the bin, I put the quarter in the bin, and specifically locking the door. I'm not going to look at this until 2024. But to your point, maybe some folks have to still move some grain. I think the overarching theme, I guess I'm hearing with corn specifically is that a lot of farmers, majority anyway, are basically saying to elevators, hey, come and get this, improve the basis and come get this if you want it, is kind of what I'm hearing, Brian.
Yeah, I think you're hearing right. I think basis will have to do the heavy lifting, and we're already seeing some sign of that in the country, that if farmers just put in the bin. So if they had a lot of this corn I was referring to was corn that was hauled into town and it's already out of their hands. So they got to make a decision on what to do, when to price it. And if they don't price it now, they have to price it into they lose a carry into the market. So it's not like the price drops, but then they're not any further ahead. So I think a lot of them just decide to price that. Big picture perspective, export sales really good today and running ahead of the same pace a year ago for corn. So that's encouraging, and I'm going to say maybe it's somewhat impressive here. We had a good number today at around that 75 million bushel mark. In fact, I'll have it here for you just in a second. And anyway, the point I want to make, though, is that year-to-date sales, 963 million bushels, and last year at this time, 723 million. So pretty good pace ahead of last year. Now, last year prices were $1 higher at this same window. But we're seeing some good numbers there for corn. But once we get past this first notice day, I think corn's buttoned up pretty tight in farmers' bins, and it's going to take something to pull it out. So it's either going to have to be basis, price improvement, or both. at least over the next 25, 30 days. And we kind of face the same thing as we get toward the end of the year. Are farmers going to dump a lot of stuff after the first, or aren't they? So my point in all of this exercise here is that we've got upside potential for price, but I wouldn't get too far ahead of myself thinking that we've got a bull market on our hands. We still have 2.15 billion bushels of carry out till somebody tells us otherwise. And it's a little bit early yet to connect any dots with crop loss in the southern hemisphere for corn, second crop corn in particular.
Wheat market has been, I think, supportive to corn here Thursday, and really we've seen wheat kind of bounce off the new lows we set in all three complexes here earlier in the week. And I know there's a lot of chatter about China in the market looking to buy some HRW wheat. Russia, some talk of maybe some export quotas or whatever the case may happen there. Who really knows? But there's been some supportive factors, I would say, in the wheat market that's helping to be supportive to the corn here late in the week.
There has. It got cheap on the board. It had a number of down days. The RSI, the Relative Strength Index, stochastic, all of those things got into pretty deep oversold territory. And then on top of that, you mentioned some fundamentals. Again, drops in the bucket, but Australia got some very, very heavy rains, slowing some of their harvest or maybe damaging some of the harvestable wheat in an already drought-stricken year due to El Nino. So you've got a lot of, there's always things in motion, right? Probably the one that stood out, and I don't really quite understand it, would be the Russian news, where Russia may limit exports or quotas, as you said. And I'm thinking, is that a ploy to try and get the market up a little bit so they can load more? I don't know, but if it was, it's working. We had double-digit gains in Chicago today. March wheat, as an example, now closed higher, third consecutive session after scoring new contract lows on the 27th. And today was our highest close here on the wheat market since mid-November. So 2 weeks removed, we're back, and we're just over, I can't tell my chart, some pretty key moving averages. The 40 and 50 days sort of pancake right there. It looks like we closed just a sliver above them.
How about that soybean trade? A little bit of pressure there on Thursday. I know soybeans have largely been driven by South American weather and still are here at this juncture. I think
For sure.
maybe some crude oil pressure, though, on the day with the OPEC meeting going on. Felt like maybe that influenced soy oil a little bit, which kind of helped keep a lid on soybeans to some degree, plus a stronger U.S. dollar. That seemed like the two factors to me that kept the lid on things on Thursday, Brian.
Yeah, and I'd agree with everything you said for Thursday. And the crude oil prices have been all over the map today, sharply higher, lower, down about $2 a barrel as we speak. So it does look like OPEC's going to cut. I think the bigger picture, why crude, some are probably wondering, well, why isn't crude just taking off if OPEC's cutting? Well, we've got excess production actually here in the U.S., believe it or not, or excess supply because of refining capacity and whatnot. But when you kind of step back, I think the bigger overarching concern there is just economically, both domestically and worldwide. Do we have the kind of economy to, absorb $90, $100 crude oil, or are we, real cautious? I think you'd be cautious right now. All kinds of leading information out there. The bond market's really taken off lately. Expectations are that interest rates probably come down in the first or second quarter. But then you talk to other people and they say, no, the economy is going to be pretty rough then too. And we still haven't abated inflation. So we'll see what happens there. But suffice it to say, a lot of volatility in crude oil, wheat finding some traction, corn finding some traction here on a Thursday. And does it change the big picture much? It's hard to get overly optimistic on corn and wheat right today, knowing what we know fundamentally and what's been driving the market downward.
As we look at things, wrapping up the month of November, getting into December, Brian, it's been a couple weeks since you and I talked here with the holiday. Anything changed for you as far as risk management here across this grain complex as a whole? Anything you want to mention and reiterate to folks there as they're thinking about things right now?
Well, in particular, if we get a rally in this corn market here, there's a lot of carry in the market. So the market is telling you to store grain, but at some point you got to just sell that grain into the carry. And I can get a little complicated. My expertise, if you will, or forte, is in the option market, and I can look at things like this and say, well, you could defend that carry with a fence. It's buy, put, sell, a call, or you could just sell a call against stored inventory and collect premium, and that call premium that we'd look to sell might make up the carry charge differential. So there are some things there, but suffice it to say, we're still in these big long-term downtrends. Initially, when they turn, it's hard to tell if you've actually turned or not. So I think you still have to be in the mindset initially. If you're not where you want to be in sales, make sure you try and make some sales on up days or multiple up days, and maintain that approach. We're not going to run out of corn tomorrow. We got plenty of it around.
Brian Doherty with Total Farm Marketing is joining us here for conversation and market analysis today on Market Talk. Brian, let's go over to livestock. I'd love your thoughts in this cattle market, because I made the joke to you before we went on, and I made it a couple times this week. I said, I didn't even buy a ticket to this roller coaster ride, yet I'm on it with everyone else here. We've been talking about it all week, and another reversal downward after a couple up days here at cattle. So what is going on with this futures trade right now, Brian?
Yeah, well, a lot of volatility, and it's not unusual when markets, so I'm not calling a low, but when they get toward the top or a bottom, they get real volatile and really jumpy, and big sharp down days and real big sharp up days. And that's what we had this week in the cattle complex. Then back down today, and then, well, it finished off, but not nearly as far. As an example, 170.87. Low price was 169.10 in December cattle, so it's $1.60 off the low. The high is 172.35. We're way off the high. So a lot of volatility. I think the market's trying to figure out if, in fact, we can get enough demand generated now that we're back under $300 on choice cuts, and under $300 on select, around that 270, 275 area there. Certainly, I think the economic concerns are abound. Higher interest rates catch up to people over time. Rates go up tomorrow, it's not going to affect your eye much tomorrow, but when we're paying bills down the road for 5-6 months in a row with a higher interest rate charge on whatever we borrowed our money for, it's another thing that adds up. And you've got Christmas around the corner, and credit card debt rising, and all this economic theory on what could happen, and a couple of wars. So it just seems to me the cattle market, what's plagued it is it tipped over as the managed money, and the rest of us looked at it, just how can you sustain demand at that higher level? We know it's tight supply, but how do you sustain it? And that's the big, nothing's changed there. It's the same supply of cattle it was a month ago. We don't change the cattle herd in a month. You may change some flow of it, but I think the market's trying to find an equilibrium price where it'll clear demand, and maybe this is it, around the 170 to 175 on the lives. Feeders have been all over the map. I thought they were well overbought to begin with. Maybe I could say that live cattle too. But now they're trying to find an equilibrium point, and I think they'll find their buying interest in here.
I wonder too, with all this volatility in futures, I would think until we settle that down, that we could have a little disconnect with the cash side of the cattle market here, Brian. I guess, I don't know, maybe you can talk to me about that a little bit, but I just have to think until we find that equilibrium here in futures, cash could be a little disconnected from the futures trade.
In high volatile markets, it is, but ultimately, the concept of the marketplace is that's emerging over time in the front months of cash and meets futures. The live cattle contract is still a deliverable contract, so cash and the futures will likely come together. I think the big picture, though, is kind of really interesting, because as you look ahead to next December, next February, next April 183.82. It's got a premium to this year is 183. Historically, a fantastic price. Now we're looking at that with, kind of, we're not so sure. Maybe that can still run to 200 yet. You've got to hold these heifers back. You got to hold the cows back. You got to have cheap feed supply, which we have. So when you hold those cows and heifers back, 180 ish area on that might still be on the low scale as we probably get toward 200. It all boils down to demand. We have a pretty good handle on what we think the supply is, and it's tight. It's historically tight.
Yeah, very true. How about this dairy market? We haven't got an update on that in a little bit. Anything you're seeing move there as we wrap up the month of November and move to December?
Yeah, just one word, ugly. It fell off a cliff and it hasn't looked back. I think we're down 10 out of 11 days in a row now. Just a real steep downturn there. Tough to be bearish. I haven't been bearish the milk. I just felt that we'd get some market clearing forces here. Butter take a big hit here from where it was. So butter kind of helped lead this rally into the early fall. But despite expectations for tighter inventory of cattle and a little bit less milk supply, the market hasn't found its footing yet. And so you got to wonder if we can't hold in this $16 area, if we're not going to revisit that $14.50 from a couple of years ago before the market had its bull run. Maybe that's where the market's destined. I don't think so. I think the market has already made a real strong measure. If you look at the way cattle market went down, the way dairy went down, the market's anticipating that the consumer spending dollar is being stretched a little further, but it's not obliterated. It's just being stretched a little further. Compounding this for both the cattle and the dairy outlook. And so these futures markets can change quickly. But jeepers, if you look at the way the stock market has been on a real strong tear lately, and again up today, the consumer's got to have a little bit more confidence. You're only human nature when you see the market gain 2,000 or 3,000 points in a short period of time. You're like, ooh, well, my portfolio is not so bad. So I think that's going to probably lead to more, if the stock market holds up, to more probably restaurant purchases and just more money being spent on food for Christmas and beyond.
Great thoughts. Before we wrap it up today and let you go, anything final you would share or reiterate for folks today?
Well, the share is just a quick, a stark reminder. Cattle showed us this, milk showed us this, even corn showed it on the last rally. When things tip over, they tip over pretty hard and fast. So one of the things that I've heard from a lot of producers saying, yeah, I knew I should have done this, or I wish I'd done that. I was thinking I was going to do that. And it wasn't a really good year to try and make much new crop sales because of the big inversion of old crop prices and then weather concerns and things like that. But anyway, where I'm going with this is, if you've been around a while, you have a pretty good instinct on things. Follow that instinct. Follow that voice that's saying, I was just talking to a producer today, and my voice was telling me here a few weeks ago that beans could go higher, but I really need to be selling beans. I can't pass up the board at 14. And he did. And then he said to me today, my only concern is I didn't sell enough. So, but he knows what the value of that is. And if you know your marketing tools, you can jump back in the marketplace in a hurry. And owning something is, I think, easy to do. It's when you own something and it's losing a lot of value, that gets really sticky. So follow your instinct, stay safe. Visit with your advisor, get ready for the year ahead. Look at these new crop prices. They're not what they were last year, but they're still above the old crop prices. So look at beans and look at corn.
Well, Brian, if folks have questions, want to reach out to you there at Total Farm Marketing, I know they can get a hold of you, phone, email, website, a lot of great ways to get in touch. How can they reach you, Brian?
Thank you, Jesse. The easiest way is with a phone call, 800-334-9779. We really like to hear what people are saying, if that makes any sense. You can hear voice. You can kind of hear the body language. Or shoot me an email, Brian with a Y, at totalfarmmarketing.com, or check out our website, www.totalfarmmarketing.com.
Always a pleasure, Brian Doherty, Total Farm Marketing. Thanks for joining us today on Market Talk. Have a great weekend, Brian. We'll talk to you next week.
Very well. Thank you.
That's going to do it for the show today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.